Good morning and welcome to the Morning Spotlight Podcast. I'm your host, Mike Camp, coming to you as always from the Spotlight Studios here in Morristown, New Jersey. Our guests today are part of the team at Beechwood Capital Advisors in Millburn, New Jersey. First up, he joined Beechwood in 2019 as a partner after serving as president of GB Capital Markets. He's been an institutional sales trader with Macro Risk Advisors in New York, established 15 new hedge funds accounts which generated incremental revenue of $1.5 million annually. He was also head of equity derivatives trading with ITG, where he launched a profitable institutional derivatives trading desk, mouthful, that provided research ideas and execution services to clients. He is Scott Rothman. Scott, welcome.
Thank you for having me.
Absolutely. And next up, he's over 30 years of experience in investment and commercial banking, as well as consulting. He's provided debt and investment banking services to public, private, domestic, and international corporations in consumer products, energy, infrastructure, and more, totaling over $25 billion. That's billion with a B. Prior to co-founding Beechwood's predecessor, the Rockland Group, in 2003, he was a managing director in Millburn Capital Group and Amper Investment Banking. He is Dick Conroy and my new clubhouse friend. Dick, welcome.
Thanks for being here.
Absolutely. All right. So, Dick, we're going to start with you because this is somewhat of a new topic for my audience. We talk a lot about real estate. Sometimes we have some different types of guests on. You guys fall into that different type of group, but I think it's really relevant to what my listeners come to expect from the show. So let's take us through what Beechwood Capital Advisors actually is. Let's define it so we can kind of build out from there.
Okay. Let me start off with, I'm not going to use jargon type terms like investment bankers and that sort of thing. What we simply do is we go out and find capital as a go-between. We're essentially brokers. So if you need $10 million for your business, we'll go to banks and alternative lenders to find the 10 million for you. Second thing we do, we sell businesses. What does that mean? You come to us and say, look, I think my business is worth $100 million. I want to sell it. We'll take you to what we think are ideal buyers for that business and get you that $100 million. Essentially, we act as a broker. We will occasionally broker buy-side deals when, for example, you have an individual who wants to grow his company and asks us to go out and find add-ons to that company. Want to make a distinction. We're very different from commercial bankers. We don't ride around with a suitcase full of money in the back of our trunk, but we basically don't have the money ourselves, but we can find it for you.
Gotcha. Not having a suitcase full of money in the trunk is a little bit disappointing. That's what I was hoping you guys were going to bring to the table and maybe bring it over to the Morning Spotlight Studios. That would be cool. But anyway, so what are some deals? Like give us an example of the types of deals that you work with, type of industries that you work in, just so we can kind of define it a little bit.
Scott, you want to jump in on that one, or you want me to take?
Sure. Because we also have a third partner. His name is Mark Furman. So between Dick and Mark, they've been in all different sectors of banking for over 30 years. So they've touched a lot of transactions and they've touched a lot of industries. So Mark, for example, has a tremendous background in advertising, in technology, manufacturers, financial services. Dick has definitely been involved in oil and gas deals, consumer deals, media deals, telecom, electronics, etc. There's a long list, and that's what you get when you're not dealing with rookies out of the gate. They've been involved in a lot of different things.
Right, and you mentioned not rookies. So are there deals that you guys stay away from? Types of deals that you just, it doesn't fit what you guys do.
Yeah. We, as Dick has mentioned, we are brokers essentially. So, we try to pair together sellers of businesses with buyers of businesses. And usually those buyers are anywhere private equity, high net worth folks, could be venture guys, could be really anybody with that suitcase of money you were just discussing. The people that we speak to directly, who we're on the phone with every week, they're not interested in startup deals. So while there's nothing wrong with startup money by any means, a lot of our clients look for boring old businesses. And I don't mean to make that sound like a bad thing, but let's find that 15-year-old plastics manufacturer that has, $40 million in revenue and, $7 or $8 million of profit. that's what a lot of our investors look for. They look for, companies, and then I'll just lead into that segue of what we focus on primarily are companies with north of 10 million in revenue and say stop at about 100 million. The reason why we stop at 100 million, because we are licensed broker dealers. There's no dollar amount we can't do. We're not trying to compete with Jefferies and Goldman Sachs and some of the larger investment banks that are out there. There are definitely more companies that are south of 100 million in this world than are north of 100 million. And you have to ask yourself, Michael, I have this $30 million manufacturing business, right? And my kid wants to work at Facebook. So I have no one to give the company to. What do I do now? And you ask around and you really don't have many avenues to go to. You could sell to your nearest competitor. You could find a business broker, or you could speak to an investment banker. And that's what we do. And we try to give that service that a Goldman Sachs will give, but to that 30 or 40 or $50 million business that has been around for a long time. And we put the deals together.
Right. Awesome. Yeah, I think that's a good way to kind of like lay out what Beechwood is. And now what I want to do, because we have both of you on here and occasionally we used to do a lot of panel episodes. Then we stopped doing them, not because they were just harder to kind of wrangle, like herding cats, wrangle a bunch of people to get on a Zoom call all at once. So because Dick, I know you, like I mentioned earlier, you're my Clubhouse friend. We have spent some time on Clubhouse, so I've gotten to know you a little bit. Scott, I know you a little bit too, less so than Dick probably, but the listeners don't know you at all. So maybe kind of give us like, how did you guys get into, Dick, we'll start with you. How did you guys go from where you were doing what you were doing prior to Beechwood to getting into this business now?
I spent 20 years in commercial lending, basically lending to private equity funds when they wanted to buy a company, and it was called leverage finance. I did that for 20 years and wanted to start my own business. The most natural fit for me was moving from commercial lending in leverage finance to doing investment banking. And I've been doing that for the last 13 years. We've gone through a number of iterations and partners. And I am pleased to say, I think that the combination we have now has been very successful. We closed 4 deals last year, and we're on a good run this year as well.
How about you, Scott? How did you wind up doing what you were doing and now with Beechwood?
Mine's a little different. Luckily enough, I happen to work on the same floor building as Mark Furman, our third partner. And I ran my own broker dealer starting in 02 to 14, where we focused on trading equity and derivatives on the institutional side. So, Michael, I wasn't able to nag you to get your 401k money. I was more about reaching out to folks at BlackRock and saying, hey, you have 10,000 S&P options to trade. I'm a good guy. I can get you better pricing than some of the bigger shops because I wasn't committing capital. So I was just going out. Think of reaching out to the old movies and such where you yell out in the crowd, I have 10,000 to buy of this. And, you get your best price on both sides. I did that for a very long time. And then I transitioned into the investment banking world. But originally it was into the blockchain world. So when I got this opportunity, I reached out to Mark Furman, who has been in investment banking his whole career. And I said, Mark, I have this great opportunity to leave trading, get into banking, but I need someone who knows the ropes that could help me because there's this whole new thing called Bitcoin out there, and I could use some help because I don't know what I'm doing. And sure enough, he taught me the ropes. And then after that, I ended up meeting Dick Conroy, and I said, not that there's anything wrong with the world of the digital securities and things that are out there right now and the digital currency, but I said, let me help some of these folks that have this, like I said, a $30 million manufacturing company, and person wants to retire. What does he do with it? So we put our heads together, and as Dick just mentioned, we had 4 successful transactions. We have a steel company in New Jersey right now that we're almost at the finish line with, which does almost $30 million in revenue, and that's really like our sweet spot of providing something where some of the bigger shops are not interested in getting involved in.
Definitely. Okay, cool. So one of the questions that I would have probably like early on in this discussion is maybe there's somebody sitting there in the spotlighters, the spotlight audience that are thinking like, well, how are Dick and Scott different than like my accountant, my wealth manager? Like if I have a business, like why would I be, going to you guys for advice as opposed to maybe one of, somebody else? Can you kind of take us through like that, Dick?
We see ourselves as an addendum to your accountant and your wealth manager. Say you're sitting on a business, it's worth $30 million. You're in your 60s, you want to exit. So where's the first place you go? You go see your wealth manager and you go, what do I need? What do I need to retire? And he goes, well, you're taking $1 million a year out of the business after taxes. So that's what, if you want to continue your current lifestyle, that's what you're going to need. So then the next step is going out to the accountant and saying, basically, what's my business worth? And he may say, it's between X and Y. The third step is then going to an investment banker and saying, I want to get this done. I want to sell this business for $30 million. Who do I go to? How do I do it, et cetera? We take over from there, but we work very closely at that point with the accountant and the wealth manager because all of us have a role to play in these transactions.
Got it. So it's like teamwork makes the dream work kind of situation for sure.
No question about it.
Absolutely. Okay. So cool. So, this is a question that I had. So when you guys talk about deals, so I sell title insurance, so I can basically understand like how my deals happen. Like contract gets signed, gets sent over to me, the real estate transaction closes, I get paid. That's how my deal operates, right? So when you guys are structuring a deal, like when you're talking about deals, like you have this, deals getting ready to close, what is closing? Like, where's the money going in? How are you guys handling the deal itself? And then what kind of comes out the other end? So maybe take us through like a step-by-step, maybe not step-by-step, but a broad overview of what this process looks like.
Great question. Once an engagement letter is signed, we spend about 2 weeks to 30 days putting together what's called investment banking quality materials, which means it's a teaser, it's a profile, which is a 30-page PowerPoint, which explains what the company is, and then we'll set up a virtual or online data room with materials that are too dense to go into the profile. Then we'll go out to the market with a teaser and a non-disclosure agreement. The teaser does not say anything about the company. It says information about the company, but does not name the company. So his competitors or her competitors don't find out that the company is being sold. Once that goes out, anybody who signs the NDA will get a copy of the 30-page PowerPoint plus access to the data room. We'll give them 3 weeks after that, and we'll ask for what's called expressions of interest or indications of interest. What that is usually a 2 or 3 page letter saying, we love the business, we love the owners, we want to buy this company, and we think it's worth somewhere between X and Y. But we need more materials, and we need to understand a lot more about the business. So at that point, we'll set up management meetings with the prospective buyers. That will take anywhere between 2 and 4 weeks. And then we'll ask everybody to update their indication of interest with something more specific, such as an LOI, and tell us where you are in terms of valuation and issues and that sort of thing. Big point here is there's a lot of fun with sponsors out there. We want to know that you got the money so you can close. At that point, we'll go through the updated expressions of interest with the client. He'll decide on who he wants to go forward with. We'll give them exclusivity anywhere between 30, 60, 90 days, and then attempt to get the deal closed. What the deal closing means is that the buyer will go out and put together equity, debt to basically fund the closing. And the money that doesn't go to pay fees, that goes to pay professionals, basically goes in the hands of the sellers. And that's how the process works, if that's clear.
That's how a bill becomes a law. Love it. All right. So what are some ways that So when I talk to maybe like real estate investors, like one of the things I always ask them is like how they find if they're like a GP and they're trying to find LPs to invest in a multifamily project, let's say, that's one thing that I'm interested in is how you identify, like where do you find the people with the money in the trunk of the car? And then where do you find the actual, identify those deals that we were discussing before? So we know like the types of deals that you guys are going after, but like, how do you find those people that are looking for, people like you? Scott, do you want to take that one? Maybe like, how do you
Absolutely.
find the people? Maybe if you want to take both, if you want to take one at a time, that's fine.
I'm happy to take both.
Cool.
It's not a very complicated thing, to be clear. What the hardest part of all this is finding a good deal. That is the toughest part, finding a good company, because we all could hear, as we talked about, earlier, there's some startups or there are failing companies which are at the brink of bankruptcy, and they say, well, even though we're at the brink of bankruptcy, we're worth $50 million. And you know that they're not worth $50 million. They're worth nothing if they're, tell me about the guy who's still selling black and white TVs. What is that company worth? It's worth nothing because no one's interested in that company. First question that I believe you had is, who are the buyers? The buyers, we have access to databases, as well as between my personal relationships in the hedge fund community and asset management community, and Mark and Dick and all their years of experience. Plus, we can buy Bloomberg style software where we pay annually, where you can actually do a search query where you could say, okay, manufacturing companies that do $30 to $40 million of business, they focus on the plastics manufacturing, and you could have a lot of these check boxes and find out who cares. And a lot of them have the information of the folks to reach out to. Sometimes it just says, investor relations, and sometimes it actually say the portfolio manager is actually interested in that specific sector. So you have to dig a little, but people who want to find these people, they'll find them. But once again, when we get these people on the phone, it's like anything else. You have to make a first impression. And if you're selling this great private equity firm a bag of goods that are not worth anything, well, you just burned yourself within that private equity firm. You can never call them again. So you have to make sure that, as investment bankers, we have to do our own due diligence ourselves to make sure we're not selling crap. Because if you're selling crap, this goes back to my old world, you're only as good as your last trade. So if you burn someone on a trade, they don't want to hear from you anymore. And you could have done 10 great things. If the 11th one's bad, that's the end of the relationship, unfortunately. But I believe, and I'm not just talking out of what you hear on CNBC every day, but there is so much money on the sidelines, people waiting to invest in great things that they'd like to invest in outside of the stock market. People may say the stock market's cheap, expensive, frothy, whatever words they want to come up with. But at the end of the day, if I can introduce you to a business that kicks you a 10% annual return, has been around for 30 years, and hopefully will be around for another 30 years, that gets investors very excited. They don't want to see they buy a stock at 50, it goes to 60, but now it's down to 30, and they want to buy in businesses, as I said, old boring businesses, or if that's a bad way of putting it, consistent businesses. They consistently make the same products. They have great clients. They have great sales, and it's an upward trajectory year after year after year. That's gold to people in the private equity world and have money sitting on the sidelines. I hope I've answered both your questions.
Oh yeah, absolutely. Yeah. I was just trying to get myself off mute because I'm a pro and don't want to start talking over you, but also frothy, I think, is my favorite word in the ones that you just said, because it's just like the visual of it is just so like it gets you thinking for sure. So one of the things that you mentioned, like over like the stuff that you see on, the news and like all the kind of stuff. And obviously, I'm not sure if you guys were aware, we've obviously gone through a year with COVID and all the stuff going on with that. I don't know if you heard, but if you haven't, we've been going through a whole pandemic over the last year. But how has that impacted what you guys do? I think that's like a really interesting thing, because obviously like it's impacted every market, in a lot of different ways. The real estate markets, obviously they impacted quite a bit, different asset classes, all that kind of stuff. But from your guys' end, did you see like any dramatic swings in like maybe I mean, I would imagine not more money out there to be had, but maybe more businesses looking for those investors to kind of come in. Dick, you want to take that one?
Yeah. What we saw is we had one of our best years ever. So, and which would surprise us because I I felt it was going to be a complete disaster. Nobody was willing to sell. Everybody was down in profits. But what COVID did is it created winners and losers. And we worked with a number of people who were winners. We sold an incontinence company, for example. They had access to product that nobody else did. We basically sold a lighting company and ended up in an auction. We got them 4 times more than what the original bid was. I would say that we're doing a construction company now. The company is probably double what they were in EBITDA as of 2019. Primarily because the New Jersey, New York market is doing extremely well in terms of hospitals adding on, as well as pharmaceuticals trying to add on because they want to manufacture vaccines. So we've been, I think we've been lucky. We have been looking for those companies who have done well in the during COVID. And basically, we've been helped by the fact that private equity funds have a lot of money sitting there, as Scott said, and they've got to put it to work. Otherwise, they owe their investors a return on that money. They haven't invested it. So they're aggressively putting out money now, and we're seeing valuations as good or better as they were in 2019.
Yeah, and if I could add to that, I think, and it's not just in what we do, in everyone's life in this last year, you've had the ability to push the reset switch, sit back and see what is going on and what can you do in your life. Do you want to live in better weather? I mean, we're all, 3 of us are all New Jersey folks. Do you want to go live in Palm Beach or Naples, Florida, or Nashville, or Charlotte? Pick a southern city, because we just learned, even though it was already out there, the technology of Zoom and FaceTime have been around for a long time, but we just learned that we could do the same job we do remotely in a cheaper place to live, in a different state, different zip code, etc. And all of a sudden you're like, wow, I could do all these great things, but I don't have to get on that train every day to New York City and drop $10,000 a year on commuting expenses. So this was a big educational moment for everybody. So, but rolling back into what we do, if you had that 25-year-old plastics manufacturer that's great, and as I said, your kid doesn't want it, you may say, you know what? We made it through. Thank God we survived COVID, not only health-wise, but the company made it through. We did okay. It's time for us to say it's someone else's turn to run this business. Let us exit. Well, I want to go fishing in Florida and buy a big boat, and that's how I want to spend the rest of my years, or go golfing, whatever that person loves or enjoys. And you think twice about saying, hey, I'm young enough still where I can enjoy my life. As most Wall Streeters are known to die at their desk. I don't want to be that guy dying at the desk. I want to be the person who goes out, enjoys it, and to Dick's point much earlier, what do I need to live on? What do I need to survive to still enjoy my life, enjoy the finer things that I'm used to? And that's what has been, obviously there's been the case of the have and the have-nots. I mean, an average beer company all of a sudden making sanitizer. Wow, they had the best year they ever had before, right? But that's a one-time moment in their careers. They're back to now making the average beer. But in terms of other things, if people made it through, I think it gives everyone a chance to reevaluate their lives. So, and by the way, and now that's the positive story. Let's go over the negative story real quick. There were a lot of companies that may have not made it through, 2020, come January of 2020. Their business is down, their salespeople aren't great, their products are relevant, and they're saying, okay, we've run this business for 20 years. What are we going to do now? Oh, the pandemic hits. Now we have PPP money. Now we can pay our bills tax-free from the government, and I'm going to pay the employees. I'm going to pay my rent. I'm going to pay myself a salary that's small, but it's a salary. I'm going to pay our health care. And now there's another round of PPP. Oh, 3 times a charm. There's another round of PPP. And now you think to yourself overall, like, okay, when this all ends, now you know who's going to do very well? The bankruptcy attorneys. Because at some point, the rubber's going to meet the road, the relief is over, and that company that was failing a year and a half ago is not going to be doing any better right now.
Right.
So that's a whole nother wave in terms of what we do, asset sales. There's going to be bankruptcies. And like I said, everyone talked and joked, I don't know if it's a joke though, that the divorce attorneys were going to be doing really well after COVID. I just think a lot of the I'm not hoping for that, but the bankruptcy attorneys, not that I'm hoping for it, but I think that's a more realistic situation.
Yeah, no, I definitely agree. I mean, with everything, like to your point, I think that with every industry, or maybe not every industry, but a lot of different industries, it's just going to take a long time, for the dust to settle on a lot of the stuff that everybody's dealing with. So like, I was on a call the other day talking about what do I think the real estate markets are going to look like? I don't know, because I don't know what the office markets are going to look like by the end of this year or next year or whatever. Like, to your point, maybe people start moving around. They start moving to other different parts of the country. Maybe, the office market just kind of dries up in New York City. I mean, I don't necessarily foresee that happening, but like it's possible, because you just don't know, because this is such like an unprecedented type thing that we've all had to go through. So yeah, I definitely agree with that. All kind of going off of the problems that, maybe some of your investors or maybe some of the companies that you work with are facing. How do you guys go about solving those problems? Because it seems like you guys have your hand, and correct me if I'm wrong, but your hand on kind of like both camps, like, and being like a mediator between both sides, between the investor and the actual business. And I'm sure that there has to be like a lot of maybe hand holding, maybe like, kind of steering people in the right direction to kind of get that deal done. So how do you solve the problems that maybe some that might arise during some of these deals? Whoever wants to take that one first. It's
Dick,
up in the air. Dick, go ahead.
Yeah, it's interesting because during COVID, we had a lot of people come to us and say, look, I've had it. I don't want to go through another cycle. My business is down and I simply want to get out, because I know if I have to go through another cycle, it could be 5 years. I'm 70, 75 years old. I don't want to be working for another 5 to 10 years. So it forced a lot of people to make decisions and move forward. What we do is give them good corporate finance advice. We don't drive them one way or the other. For example, we were talking to a construction company, did a lot of work with casinos and that sort of thing. In the middle of COVID, they basically came to us and said, can we sell? And our answer was, no, you're probably not going to sell for anything near where you're worth. What you're better off doing is seeing to find a family member and transition the business that way. That was the best corporate finance advice for them at the time. Other people have come to us. For example, the incontinence product was owned by an individual who had another business, and he didn't want to spend more money and more time building this business. And he said, I can either sell it or shut it down. Our answer was, we think you've got a good chance of being able to sell this. And it turned out Scott's our syndication guy. He went out to Europe, found a European company who was interested in getting into this market. It was an absolutely ideal fit, and we closed in 3 months after that. So it really depends what is the right thing for the customer, what's going to benefit them the most.
Gotcha. Awesome. All right. So let's move it and maybe get off the problems and talk about something that maybe like will get you guys. I know you're excited about talking about this because it is your business, but really excited because one of the things that Dick, that you mentioned before we got on the call was that you wanted to talk about a deal that you worked on over the last year and a half that was probably like the most interesting one that you've worked on over that time. And I think it's all very relevant because of all the stuff that we're talking about right now. So what is that deal? I mean, maybe Scott, if you want to jump in on that, if it's the same deal, if it's a different deal that you found really interesting, we can kind of take it from there. So like maybe the most interesting deal you've worked on over the last year and a half, Dick, if you want to take that one first.
Let me go back a little bit further. And it was a real learning experience for me. It was selling a surveying and basically a survey and an engineering company. Very, very profitable. Did about 20% in EBITDA. So, which is, it can be unheard of for these businesses. And we went out to about 300 different buyers, mainly larger engineering companies who we figured they would love this business. And the answer came back in a very surprising way. It was, yeah, we love the business, but if we buy it, we're going to screw it up because we basically, our surveying business is probably a 5 to 7% EBITDA margin business, and you guys are doing 20%. So obviously, you're doing something much better than we were doing. So even though we were convinced that they were the right buyers, we ended up finding what's called an independent sponsor with a lot of experience in engineering, who teamed up with a bank and actually bought it for a very good price for my customer. So, the point being, when you go into something, it isn't necessarily works out the way you think it will.
Scott, how about you? Do you think that was the most interesting deal? You got something else you want to jump in with?
It's not necessarily interesting versus not interesting. I think what's really blown me away, especially with, COVID for that matter, is that what Dick had mentioned earlier. I went out to people in this country for an adult incontinence business that is based in New Jersey. And we had some interested folks, but we ended up finding the buyer in Milan. And this buyer had similar products over in Europe. And even though, as we recall, Milan was the worst hit city in Europe, they were the shutdown one first, if everyone remembers. And every day I was just waiting for that phone call that they were going to cancel the deal for obvious reasons. Their world was crumbling. They were worse off than New York City in the beginning. And somehow, some way, we did enough hand-holding, and they were really interested in buying the company. And we're closing this in the middle of, I think we ended up closing at the end of May. And May here last year, the world was still really on fire. Things were not so great. So I found that to be interesting, just in terms of, I don't know if that's just keeping up and being diligent, or just a little bit of luck along the way as well, or having a good product. But the one of the things that Dick just brought up, I just want to bring up again. So it was the casino, a company that does all the flooring in the casinos in Atlantic City, and they do other commercial. They did other commercial buildings, hospitals, office buildings, and such. They do all the maintenance. So if the Borgata was looking for new travertine on the floor, they were the ones doing it. They were the ones servicing it. They were the ones cleaning it. Like, that's what they did. And this company was crushing it. They really, I don't want to say they had a monopoly, but they were the Kleenex of the tissues. They were the household name company that would do this stuff. And when this thing stopped and the world stopped, that also stopped their getting paid their accounts receivable and any new business possible. Like, just imagine you're at the club and the record stops. And I think that in general was just, obviously it was tremendously sad for this business, but it's also just a reminder that you never know. Now, not that anybody could ever imagine when the pandemic would have started, but you might be selling a product that everyone wants. It's not so bad to sell the product when you're at the top of your game, because everyone waits for that, oh, I'm not ready to retire yet moment. But if your business falls out of favor, or their product falls out of favor, or the world falls out of favor for that matter, all of a sudden you could just be walking away from 30, 40, $50 million, and now you have nothing. And that to me was just, you have this piece of gold that's worth something, and now all of a sudden it's you might as well throw it in the garbage. Wall Street is painful. Business is painful at times.
Yeah, it seems that way. Definitely. So let's take it a little bit further. So, maybe you guys can talk on this. Maybe this isn't a question that directly relates to the stuff that you guys do, but, you mentioned how the last year has probably been the best year that you guys have had so far, but let's take it further. So maybe looking ahead, what are some things that are you trying to forecast different things? Are you trying to look ahead to maybe how, different businesses might adapt, different businesses might, different industries might struggle. Are you looking at stuff like that? Is that stuff that you could even say on the air? What are some things you're looking at moving forward?
Absolutely.
Go ahead, Dick. Yeah.
Yeah, we're for example, we did a deal in the lighting industry, and there's a lot of consolidation now in the industry. Private equity is very interested, given the fact that there's a construction is up, at least in the Northeast, and we may get an infrastructure bill. There's going to be a real demand for LED lighting throughout a lot of these infrastructure projects, and people who know how to do it are going to be in demand. The other area we're looking at is the laundry supply business to restaurants and caterers. We sold the business in that space, and what we had to do is basically tie the payments to the revenues starting in May of this year, because we knew that a lot of these restaurants and caterers are going to come back, but we just didn't know the exact timing. So, and now we find out that a lot of the caterers now who do weddings and events are booked 7 days a week, and sometimes having 2 parties a day, and they're going to more than make up how they did in 2000, how much they lost in 2020. But the point being is that anytime there's change in an industry, there's often opportunity in that industry. And with the laundry supply industry, a lot of the competition has merged or gone out of business because it was so tough during COVID, but there's going to be a real upsurge in demand in 2021.
Very interesting. Yeah. So it's always interesting to see kind of how, like, everybody's trying to like figure out like the next, like what's going to happen next. And like I said, I just think it's going to take a long time for the dust to settle. So I was just to kind of see like what you guys thought as experts in this field. So maybe like, as we're kind of like weaving our way towards the end of this episode, one of the things that I always like to ask some of the people that come on here are for goals. Right. So like, I mean, obviously you guys are very goal oriented. You're businessmen. You're, trying to be successful. You're trying to make money. You're trying to help people, all that kind of stuff. So we can kind of go Scott first, maybe then you, Dick, maybe even look at like over the next year or so. So what are some goals that you have for Beechwood?
Well, I could tell you some of the goals that I have personally. I focus on 2 segments. I focus on business development, and you had asked earlier how we get, how we get our deals. And I think that as another notch in the tool belt of, the CPA and the financial advisor, you could always say trust an estate's attorney or even M&A attorneys if there hasn't a banker assigned. I want to meet as many of those people as possible because especially when it comes down to, a business owner's CPA, that business owner may speak to that CPA as much as they do their spouse, right? So you say, who knows someone that's selling their business? Their trusted people around them do. And any one of those people I just mentioned could be the one or the many, right? So it's my goal to work with as many of those people. It's also a goal of mine because as I mentioned earlier, I foresee a lot of unfortunate bankruptcies in the future. Work with as much as I can in the bankruptcy attorney space, because there's unfortunately a lot of people who have signed, personal guarantees, borrowing money for their businesses because that's their, they've ran that business for 30 years. That's their life, and they sign away a $10 million personal guarantee. And when they sign that, to get letter of credit from the bank, it was nothing. It wasn't even a risk. And now all of a sudden the world's changed. So a lot of the times these companies go to bankruptcy. And we're going to be doing the same thing that we normally do in investment banking, where we try to sell that, have an asset sale, where someone buys this company, clean after Chapter 11, but that hopefully we get enough money to get the person who has the loan off the hook. So he's not going to have, big banks coming down on them, destroying their credit and everything like that. So that's where you could really create the win-win is the failing business owner, if he can, get out of the shackles that he's in right now, where he's being choked from the banks and all these things. Well, if we can get that off of his or her shelf or desk, however you want to call it, then we're able to help out and create the win-win. And then all of a sudden there's a new buyer of the business who's, newer capital, newer ideas, etc. And hopefully, wish them well. So that creates the win-win-win. So right. Hopefully helping the companies that are successful, looking for their exits after this nightmare, and off people that didn't work out so well, getting them off getting the noose off their neck.
Gotcha. How about you, Dick? Any goals moving forward for this year?
Absolutely. I think Scott said it best. We do very well when we're helping other people, whether it's helping them find a liquidity event or it's helping them find financing solutions for what they do. And our goal is to really expand the network and find those people who we can be most helpful to. And that includes for us expanding our digital marketing strategy, expanding our network now that COVID is at least starting to tamp down a little bit, and literally look into areas that we've been successful in helping people either selling their company or raising capital for, and doing more in those industry segments.
Awesome. Yeah, I was also going to ask, what, like the people that listen, the types of people that you guys like to meet. Scott, you said CPAs, bankruptcy attorneys, M&A attorneys. Is there anybody else like that?
Financial advisors.
Financial advisors. Awesome. Yep. Cool. And I know we have some of those in the audience, so some of them are spotlighters, so they should be calling. If they're not, then let me know, and I'll start hitting the drum.
Well, Michael, for the financial advisors specifically, I want them to think about it this way. All right, let's just say you work, pick any random company, Merrill Lynch. Okay, so you're a Merrill Lynch employee, and you have a $20 million chemical business, been around for X amount of years, and the person's looking for an exit. And he calls his trusted advisor and he says, "Hey, Bill, can you please help me? I want to sell my business." And Bill says, "Sure. Here's the problem, though. Our investment bankers are looking for deals $500 million and higher in revenue. You do 20 million. I don't really know if I can help you." So rather than telling your client no, which is, as we know, the worst possible thing anybody could ever do, tell their client, "Hey, I may know somebody for you." And we work then, let's call it hand in hand with the financial advisor, because guess what? If we're able to get that exit, hopefully for that client, and he sells his business for $20 million, where's that money going? It's not going in his Chase savings account. It's going to the financial advisor's account, because they get paid on percentage of assets most of the time. So it creates the win-win-win. Everyone held hands, everyone worked it out. And of course, then have the person creates a trust in estates relationship to avoid paying less taxes, or any which way they set these things up. It's just, you create the win-win-win. And as we all know, because we all have friends and family and business relationships, creating the win-win-win is the toughest thing to do.
Oh, yeah.
But when you do it, boy, does it feel great.
Oh, yeah, absolutely.
And that's the goal in all this. So I'd say financial advisors are probably our number one target for that.
Awesome. Okay, cool. All right. Noted. Spotlighters, financial advisors. Let's make sure you think of these guys when you actually have those kinds of deals. All right. So we are going to move the show into our closing segment called Under the Spotlight, because this is the morning spotlight. So the spotlighters, which is what I call the audience, have listened to me, Dick Conroy, and Scott Rothman talk for the last 45 minutes, I think, or so. So we're going to start with Dick and then Scott. So Dick, we're going to put you under the spotlight first. So what is one thing you want the spotlighters to walk away from this episode with? It could be something that we've talked about already. It could be something that we haven't mentioned about Beechwood, about deal making, all that kind of stuff that you think is super important. What is that one thing?
I think at the end of the day, I would love people to understand that we are different from your commercial bank and your wealth manager. We will help you solve corporate finance problems, such as how do I sell my company and get maximum value, and how do I raise capital, such as equity, to build my business.
Awesome. Love it. Scott, you're under the spotlight. What do you got for us?
I'm under the spotlight. Well, Dick obviously covered, the functions of what we do. If I want everyone out there to know, we are happy to be an open ear. We are happy to take a call, hear what your clients' thoughts are, hear what your concerns are, see if we can help. We don't charge by the hour. We're not attorneys. We are here to handhold, give advice. Sometimes it's a fit, sometimes it's not a fit, but use us as a tool in your belt.
Absolutely. And create the win-win-win. That's what we're all looking for. I think that is probably going to be the message of the episode. Create the win-win-win. So BeechwoodCapitalAdvisors.com is the website. Is there any other place that you guys want me to direct the Spotlighters to go to reach out to you guys? I'll put everything in the show notes, obviously. But is there any other spot that you guys want them to go?
You can also find us on LinkedIn.
LinkedIn. Cool. I'll put both of your LinkedIn profiles on there.
Right. And I'm on Instagram, so you can DM me.
Awesome. Scott, any other place for you?
Michael, I mean, we just sent you our updated marketing and flyer. If happy for the crowd to see that. It has my personal mobile. It has our email addresses and everything about us.
Awesome. Love it. And then Dick's also, both of you were on Clubhouse. I know that. So that's like my new favorite toy, trying to be as out there as possible. So make sure you connect with those guys as well on there. So Spotlighters, that's going to wrap up the show. I will put our contact information in the show notes as well. themorningspotlight.com, themorningspotlight@gmail.com if you want to reach out directly to the show or reach out to me to connect to Dick and Scott. Both of you guys, thank you so much for doing this. This was absolutely great. Totally outside the box a little bit, but I thought it was really great. Really well done. Thank you both for doing this with us.
Thank you, Michael. We appreciate your time.
Absolutely. Absolutely. And Spotlighters, thanks for listening, and we will catch you next time.